Hi everyone, and welcome to AAT Level 4 Synoptic Assessment. My name is Gareth Thomas and I am the course manager for AAT at London School of Business and Finance. And I'd like to talk to you today about the Synoptic Assessment at Level 4. Try and relate the learning outcomes today to the criteria that the AAT are looking for, and to have a look at a typical first task of a Level 4 assessment task for the Synoptic Assessment, and hopefully we work through that. It's Friday, so you don't have to do anything. All you have to do is watch, put your feet up, enjoy, and take away, I'd like to think, as much information as we can possibly give you to make you confident and comfy in what you're doing. So I'll carry on and start talking about the assessment at Level 4. Now, first thing is, what we are looking at Level 4, as you know, the Synoptic Assessment structure is slightly different to what you've done so far. And what you've done so far, you've covered Level 2 and Level 3, and the Synoptic at Level 3 would have been 2 sections, and you would have had to upload spreadsheets, and that's your last memory, I would think, of what a Synoptic Assessment is. And we've got to Level 4 and we're at a stage of, well, what do we do at Level 4? Now, this is different and you're all probably aware, if not, you will be by the end of today. And what you have to do, there's pre-release material to read. And you need to read this material before actually going into the Synoptic Assessment. And it's very useful stuff, gives you a good background on what you need to look for. Okay, you can't take this in, however, the information will be there for you in pop-ups. So you can actually access the information even though you can't take in the stuff that you've already read. It's the same thing, but obviously there are exam rules and regulations. Now, questions on this Synoptic Assessment at Level 4, that they are set around the business with the pre-release material that we are talking about. And what the pre-release stuff talks about, and in a case where we're looking at today and for the live assessment, it generally gives you a background of the type of industry that the business is involved in. So at the start of the pre-release material, you will nearly always get a paragraph, or you will, at least a paragraph saying we're in the electronics industry, we're in the car industry, we're in the manufacturing, aviation. It doesn't really matter, but you will get a background on what that industry is all about. So that'll be covered. You'll also be looking at the structure of the business and how it's organised. And this is something to get familiar with. You may have 3 or 4 divisions, you may be operating overseas, you may not. That is all contained within the background and the pre-release material. So it's very important that you read this thoroughly. Also, you will get a list generally in an appendix of some sort, actually giving you the personnel who are involved in the business. So it'll tell you, very likely, there's a human resources manager, there's a marketing manager, there'll be the financial accountant, there'll be a management accountant, the managing director, and a whole host of account staff within the accounting section. So that'll be given to you, and hopefully, and generally I think, within a list. So you're expecting all this sort of material. It'll also cover developments in the marketplace, and that's quite important because those developments inevitably will constitute part of the questioning. So with these developments in mind, what would you do? Where would you go? What would you suggest? Because it's Level 4, you're actually they're going to pull out answers from you. You have to analyse and produce real strong answers. So developments there, important to have a look at. Also, something that we've looked at and we will look at in the practice assessment that we'll do, we're looking at how the company monitors performance. And within the background material, it'll tell you how the company monitors performance, and it might ask you to suggest ways of improving this. So it'll give you some standard ways, but it could ask you to change things around, suggest improvements, identify weaknesses or areas that could change. If you make a takeover, then you'll be looking at these sort of things. That's all under there. And for this, what you will get in the pre-release material, you'll get financial performance, customer satisfaction information. That will be contained within the written material. It'll be within the background. So that is all available. And often what you will get, you will get statements, financial statements added as an appendix as well. You could have a statement of financial position, which will be added in, and there will be maybe a statement of profit or loss, or a statement of comprehensive income as it's called, maybe some consolidated accounts, okay? They will all appear within the background information and available as pop-ups. So this is the approach to get familiar with what we've got. Now, at level 4, there are 6 tasks to complete for the Synoptic assessment. And we're looking at task 1 and 5, which is computer marked, and the rest are human marked. Human marked means, as you're very familiar, 6 weeks turnaround. So 6 weeks for feedback. You must study the other mandatory units. We must get through those units to enhance or give you the maximum chance of getting a good grade on your Synoptic. And as you need to schedule your Synoptic when you've done those. So passing those very well gives you a good Synoptic grade. So with the assessment criteria, the first one that we're going to look at, which is today, and what you have to do is to demonstrate an understanding of the roles and responsibilities of the accounting function within an organisation, and examine ways of preventing and detecting fraud and systematic weaknesses. So that is the first assessment objective, and it actually matches what you hope to see, or you should find, in your first task. So fantastic news, that objective will be examined, and it'll be examined in task 1. Now, if we take that down a little further and break that down, what are we looking at for task 1? Well, we're looking at something that's going to be multi-choice, and it's going to be computer marked. So task 1, computer marked multi-choice, and the weighting, 20 marks for this. So it's got quite a weighting for this particular assessment task. Where does it come from? What part of the syllabus? Because we know a Synoptic is a mix of everything. So where this comes from, this looks at roles and responsibilities of the accounting function and detecting fraud, and it all comes from accounting systems and control. So this part of the examination is pulled really from that part of the syllabus. However, it'll be mixed with other things as well. All right. So even though it's covered from there, you can expect to see various journals involved in this, information, there may be something on ethics, there could be a whole host of things, because you cannot forget what you've done already, hence the Synoptic assessment, not easy. Examiner's comments in task 1. What does the examiner say? What has gone right and wrong with this particular unit? Well, hopefully mostly right. Let's have a look. Overall, students perform well. So that's good. However, there are areas of weakness, and this is where the examiner's reports are crucial, and crucial for you to read because they are available. And weaknesses are the detection of errors. So that is a weakness. What should and should not be included in cash flow. So that is something to look for. Now, these comments are generic comments, and they apply to the overall student attempts, not any particular assessment. So they're right across the board. So we need to know what is included in cash flow, and you need to be aware of that as students. If you've taken cash and treasury management as an option, even though you've not studied it, hopefully you're strong in this section. If you haven't, may need to revise these things and make sure, because it does cross over with your financial statements of limited companies. So that's something to look for, okay? Let's look at these weaknesses. Knowing which decisions are in the hands of the directors and which are in the hands of shareholders. So they both work independently, so you need to know the difference between what a director's role is within the business and a shareholder's role within the business. So those are the weaknesses, and those are areas that we need to look at and concentrate on. And that is straight from the examiner, so that is very topical, and that is the latest report that the examiner has produced. So I think at this stage, we know what we're looking at, we know where the things come from, we know the learning outcomes and objectives covered, we've read the examiner's comments, so let's perhaps have a look at one of the questions, and the first question on a typical Synoptic assessment at level 4. Now, what we have here, we have Louise Harding. This is a general background. Louise Harding is the FD, Financial Director of SL Products. Now, SL Products, this is the task that relates to the pre-released material you've already had access to for SL Products. So there's the link. So that's exactly what you'd expect. Has asked you to analyse the published results of a competitor business. So a typical job role. Until recently, you were employed by that business. Therefore, you have a detailed understanding of its financial position. So in other words, you've been employed by SL Products, moving from another business. Answer the following questions. Which of the principles is threatened by this request? So this now relates back to Unit 3 Ethics, if you think of it, and it was covered there, and it also appears on your Accounting Systems and Control syllabus, because that is where it's all being dragged from. So let's have a look. Which are the objectives? Now, you worked for someone before and you've got a lot of inside information. You've got this stored, and really you had access to that when you worked there. So should you be passing this information on? And this is the dilemma that you would be faced in a job role. What do you do? So what does that suggest? Well, straight away, I think we can see the answer. And we'll take it anyway, because that is confidentiality. Because you're not behaving with confidentiality, which is in the Professional Code of Ethics. So we would take that as being the answer to the first one. Would it be objectivity? It wouldn't cross over into that. Would it be professional competence and due care? Well, not really, because you've not been asked to do something outside your skills and capability. So I think that's quite a nice question. And that is confidentiality. So that is the first one. Okay. Now, how should you respond? Let's have a look at what the competitors' agreement. Should we obtain the competitors' agreement or shouldn't we? Well, I don't think so. I don't think that's a possibility, is it? Would you ask the competitor, can I tell someone a bit of inside information? I wouldn't be very happy if I was in charge, so that's possibly not the thing to do. Could you base your analysis on published results? Well, results are made public, so they are available to the general public. So from that point of view, you could base your results on published results, and that is quite within your remit, within your role. So that is a possibility that could happen. Let's go on further. Refuse to do the analysis. I wouldn't do that in a new job position. I would be glad to be there. I would be quite happy to take on a role and senior role and responsibility. So of those three, which would be the logical one to do? Well, we'd base it on published results. So that would be the answer to that question. That's 4 marks, everyone. So that's not a bad 4 marks to bag to start off with. And hopefully we're all happy there. So let's have a look at B, section B. Show whether or not each of the following should be included in a cash flow forecast or not. Now, this was one of the things that the examiner commented on was quite weak. So should this be weak really, or should this be bread and butter for us at level 4? So let's have a look. What do we include and what don't we include in a cash flow? Revaluation of premises. Now, let's think what's happening here first of all before we put an answer in. So if premises are being revalued, inevitably, or more often than not, they'll be revalued upwards. So you are, or the company, is increasing the value of an asset. Now, when you think of the balance sheet equation, assets equals capital plus liabilities, one side of the balance sheet equation has increased. So what else has actually increased? The other side of the balance sheet. And that would be under your reserve section of the balance sheet. So what would happen here is one side would increase and the other side would increase. Has any money changed hands? Have you sold anything? Well, no. So there's no money, there's nothing on a revaluation. It is purely a journal entry. So do not include that in the cash flow. And hopefully everyone is quite clear on what I've done there. Yeah. Now, Let's have a look at the bonus issue of shares by SL Products. So what's happened, they've done very well, and what they decided to do is to issue shares to existing shareholders. You get bonus shares, it could be 1 for 2, 1 for 3, it's very nice. However, they're not paying a dividend. They could be using reserves for this. So they're not actually paying anything out. They're issuing shares in place of actually leaving cash. So a bonus issue of shares, again, that should not be included in a cash flow because there's no generation of cash coming in or cash coming out. It's a journal within the business that moves something around. So we'll say we'll not include that. Now, payment of dividend. Well, companies generally pay dividends twice a year. There's what we call an interim dividend, which is halfway through the financial year, and that is followed by a final dividend. And really the amounts depend on how well the business is doing. I suppose logically you would pay a smaller interim than a final because you still have 6 months of the financial year to run. So behaving rationally, that's what you would do. However, it does say payment. Now payment, what does that indicate? Well, as financial accountants and cost accounting, and you've covered these units, that means money leaving the business. If money leaves the business, is that part of a cash flow forecast? Well, yes. Okay, be it an interim, be it a final, that is part of your cash flow. So we take that. Write off obsolete stock. So obsolete stock is stock that can no longer be used. Often you could get a scrap value for this, and if that is the case, then brilliant. Then there's some money coming in on it. However, if you are writing it off completely, there's no scrap value, and therefore you will not get any money for it. So, can you put any money in, or is it a money here? No, there isn't. There's no cash coming in or leaving the business. So what we have here is do not include. So that is that section covered. Now that looks like 2 marks each for answering something that really you do need financial accounting knowledge, but when you think logically, get right under the question, ask yourselves, question yourselves, is there anything coming in? Is there anything leaving? And if you do that, then you'll get the answer and you're already on your way to working through task 1, which is a good mark question. Right, okay, next one. Liz Hall, the accounts payable clerk, asks you for advice. She wants to know whether the following errors and discrepancies would be detected by reconciling the accounts payable ledger. That's the first thing I'm going to underline. I'm dealing with that ledger to its control account. So we're bringing in knowledge that we've gained from other units here. Show whether each of the following errors and discrepancies would be detected by reconciling the accounts payable ledger, which is one we've underlined, to its control account by ticking the correct answer. So at the end of the month, very likely that a control account is going to be produced. Would these errors be detected? So she's an accounts payable clerk looking for really a little bit of mentoring, hence the work-based scenario. Now, a supplier has been paid twice for an invoice. Would this be detected? So what's happened? Money leaves the business and you take it off the supplier's account. Regardless of the debit or credit, there's one going out and one being adjusted this end. If it happens twice, is it going to throw anything up? Or is it just a mistake? Because the accounts will still balance, because the debits will still equal the credits. Okay? There is nothing untoward. They haven't both been posted on the same side. So would that be detected? That would not be detected. So, no. So that's the first answer. A supplier invoice has been posted to the wrong supplier account. Now, wrong supplier account. It's been posted on the correct side because it doesn't tell us anything different here. Now, if it's on the correct side, it means the account's balance. It's the wrong supplier, but are the accounts going to be balanced? Would that be detected? Well, it wouldn't. A check payment has been debited to the account's receivable control account. So would that be detected? Well, we are dealing with the accounts payable. So it's gone to the accounts receivable, so it would be different accounts. VAT on purchases has been omitted from the VAT return. Well, are we reconciling the VAT return in this question? We're not. We're reconciling the accounts payable. Okay. So that would not be detected. And finally, in this particular question, awkward questions, to be honest with you, it takes a bit of working out and you may need to use rough paper. That's fine. Just go ahead within the exam. Ask the examiner for some rough paper. A purchase invoice has been debited to the account of a supplier. Well, if it's debited to a supplier, it's on the incorrect side. Now, if that is the case, would that be detected? Well, yes, because it's on the wrong side. And if the other half of the entry is correct, then that is going to be detected. So there's 1 mark for each of those. Now, I think the only awkward thing with this particular question is it does draw knowledge of something that you might not have used that often during your financial statements at level 4. So there is a little bit of information that you have to work on here. And you have to kind of get under this question. And I would strongly recommend you get rough paper, roll up maybe some T accounts, and then work through what should have happened and then tick the right answer as you go along, and then work it out from there. But some of them, remember, underline the important bits to start with. Now, Liz Hall maintains the accounts payable ledger. Her duties include ensuring that the accounts payable ledger agrees to its control account. So her job is really part of the reconciliation, if you like. That is her role. She maintains it. So it's quite a strong position here to do that. So what sort of access should Liz have to the control account? Now, bearing in mind that Liz, it's her role to make sure it all agrees. So which type of access? Now, this is quite interesting, really. Should she have no access? Well, obviously she can't have no access because she wouldn't be able to do her job. So one of these three is immediately you can actually dismiss. So the no access section, I mean, that's ridiculous. Read only access, interesting. She's reconciling it, so she'll be able to just see it and then work on it or not. Or full access, including data entry. Now, this is where the controls section comes in, and you have to implement controls. No access, I think, is not possible. And full access, including data entry, that it gives a weakness, really, I think. And that means that Liz Hall would have access to putting in the data and making sure it balances. So that would indicate a weakness within the system. So for that, I would suggest that Liz Hall would get a read-only access for this particular situation. And another section that is examined within task 1. An inventory count, in other words, a stock take, which is probably the words that you would use within business, is to take place at SL Products financial year end. Sue Hughes, Chief Accountant, is concerned that the stock value will appear to be too high. Okay. She suggests that all inventory receipts in the final week of December should be dated the 1st of January and that those items should be excluded from the count. In other words, she's putting the dates just outside the remit of the stock control situation. The relevant purchase invoices would be posted in the new accounting period. So what she's doing, what Liz is actually Sue is suggesting, mixed up with the last one, is that you hold fire, if you like, on the dates. So what is happening here? Is this acceptable commercial practice? Well, no, it isn't acceptable commercial practice, and that's not what you should be looking at within, certainly within the ethics module that you've covered, and source of responsibility, really. So that's not. Unethical window dressing, let's come back to that. Is it fraud? Well, technically, is it fraud? Because we're not changing any figures, and we're not hiding anything massively that is going to cause a huge discrepancy in the stock figures. There's a delay, and this delay is stopping things happening. So I don't think there's any fraud there. And breach of the control environment, that really is thrown in as a distractor here. It's not a breach of the control environment. So I think for this particular situation, the answer to give here, it's unethical. That is the word. It is unethical, and it's window dressing. In other words, the accounts look better than they actually are, even though things, there's no fraud that's taken place. Now, that covers question 1, which is a good example of a standard synoptic assessment that you're going to get. We've covered the units, we've looked at various items. Cash flow, we've addressed examiner's points. So I think that's a fairly typical practice synoptic assessment, and I hope you get something like that during your exam. Thank you for watching. Right everyone, thanks very much for your time this afternoon, this Friday afternoon. I hope you've enjoyed what we've talked about here today, and you got some good tips on looking at a synoptic assessment. We know how it's built up, and you should know really what's expected for task 1 when you go into your synoptic assessment exam. We will be continuing with this next week, and we'll have a look at the learning objectives and outcomes for objective 2, and we'll also look at task 2 and what is going to be applied then, and how you would get through that with some more tips and advice, and hopefully a nice enjoyable Friday afternoon before your weekend kicks in. So once again, thank you very much, and hope to see you all next week. Bye.